Hey everybody, Boris, BK Forex. Welcome to our weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for September 10th to September 14th, 2018. And a story this week was really the fact that the dollar is kind of torn between the trade war worries and the fact that U.S. data has actually been quite positive. So we have this tug of war with anti-dollars really suffering a little bit. Euro dollar now coming down to its support level around 1,500. Pound dollar certainly getting crushed on Brexit woes, but dollar yen not really rallying as much as you would think it deserves, given the fact that we have positive U.S. data. And the reason why there's such an overhang to the top side for dollar yen is primarily due to the fact that the market continues to worry that the trade war rhetoric, which is really ratcheting up, especially against China, where there's a massive amount of potentially new tariffs going on, could really cast a pall over global growth going forward. Market is a discounting mechanism, so it doesn't really matter what's happening now. It's looking forward, and what it's seeing looking forward, it really doesn't like. And that's, I think, the key takeaway here for the dollar trade as we go forward. So take a look at ranges. The ranges have pretty much actually stayed within the levels we had last week. 1,500 to 1,700 on the euro dollar, 10 to 1,200 on dollar yen. Still really can't break any of those ranges. Pound dollar really probing the lower end of its range. We're going to take a look at it technically. It really had a very, very negative construct as far as the technical structure goes. But as always, the story with the pound dollar is you can't trust anything because it's all headline driven. So we have to be very cautious about what the technicals could be sending us, because they could all essentially be blown apart if we get positive Brexit news coming out. So I think we take everything here with a grain of salt, simply because it's so headline driven. Now, as far as the calendar goes, next week on the majors, we have a few relatively important data points. We start out with UK trade balance and industrial production. Kathy is bearish on that. UK labor data, really no view on this point, but unless it really becomes extraordinarily positive, I doubt it's going to have much of an impact on the pound. And then we move on to European zoo data, US PPI and CPI data, and then we also have on Thursday the ECB meeting, and that should be kind of interesting. So there's obviously no decision. The really big question mark that's going to be in front of the ECB is will they maintain what I would call their relatively hawkish stance that the QE is coming to an end, that they're going to essentially begin to taper? And I actually think the answer is yes, because the one thing that a lot of people may have missed or just sort of ignored as the week progressed was the fact that Italy, which looked like an incredible trouble spot as far as fiscal spend and everything else, became much more disciplined, at least in its rhetoric. The populist government of Italy basically, I think, looking out onto the world and seeing all the turbulence in the emerging market nations, especially what's happening in Argentina, where the currency has just gotten absolutely destroyed, made a very important and calculated decision that it's much more important for Italy to stay within the European structure and have the protection of the euro than to flirt with this whole idea of perhaps spinning out of the euro, creating this whole populist thing. Because obviously, if Italy decided to spin out and go to lira-based trading, it could enjoy the same fate that Argentina does, which is complete and total destruction of its currency. So I think they took a look at this, and it was a kind of a scared straight moment for the Italians. And that in turn, obviously, is positive for the whole cohesion of the European Union as we go forward. And that allows President Draghi to be more hawkish than he would have liked to have been, or he would have needed to be, if Italy was becoming a serious problem. So I think net-net, the ECB meeting should be mildly hawkish, euro positive, but maybe essentially a non-event as we go forward. And then we end up the week with U.S. retail sales. What was very impressive this week, or last week, was the fact that U.S. wages really finally showed some serious upward momentum, up to 0.4 of a basis point versus 0.2 looking. And the big question here is going to be whether that increase in wages translates into increase in spending, because that creates that virtuous cycle that everybody anticipates in the U.S. economy. Whether that happens really remains to be seen. But overall, if you just look at the U.S. fundamentals, they are more bullish than most people thought they would be at this point. We're really seeing no evidence just yet of peak U.S. growth. And I think it's going to be interesting to see if the dollar yen can actually confirm that thesis. Now, looking at the euro, let's just take a look at the text here. Looking at the euro, yes, we ended up on the lows of the week essentially, but again, pretty much at this 20-period SMA support. And if you look at the euro, the whole trade in the euro has continued to find support around these levels. If we can't break down to below 1500 for 1 or 2 days forward next week, that's actually should be a relatively positive sign for the currency. We could have a rally back up towards the 1650, 1700s. A break below 1500 really creates a much more negative dynamic technically. It basically shows this huge distribution top now becoming a big distribution top at a lower level. So, we distributed at the 25 level. Now we're kind of going to be distributing at the 1800 level with lower highs and a move back down towards potentially a double bottom test at the 1300s. That's really the key tell here. I wouldn't commit myself to one way or the other towards the euro trade unless we traded above 1600, sort of showing that 1550 held, or we traded below 1500, showing that we're really breaking down below this key barrier of support. Until now, it's in the middle of no man's land. Does showing support at the 20-period SMA, but that's not really the critical support. The critical support is the 1500 figure support, which we're going to be looking for as we go forward. Cable, on the other hand, looks horrible. This is, by the way, this is just a daily chart. Look at this shooting star on the daily chart, but I think we have to go to the weekly chart. Let's take a look at the weekly chart. The weekly chart, well, the weekly chart doesn't look nearly as bad. I thought the weekly chart also had a shooting star on it. The weekly chart sort of is showing you a doji, but on the weekly chart, it's just massively in a downward pattern because it's underneath the 20, it's underneath the 500 on the weekly. It's still remains in a big downward trend. On a daily, still also very negative, above the 20, but this big shooting star rejection, if you're just simply trading it technically, really gives you lots of confidence that perhaps we're going to move down to the 2800 level. The big problem, of course, here is that anything that happens here can be completely reversed based upon one single headline. If they come to some sort of an agreement with the European Union on Brexit, this flips the script around right back up. The reason why you're seeing all of this up and down movement really doesn't have much to do with the economic data, but just with what I would call the bipolar nature of the negotiations. The fact that Ireland still remains a sticking point, but clearly both parties want to create some sort of an agreement. But yet, the longer they go, the higher the probability of a hard Brexit coming into being. So very hard to say. We filled the gap. If you look at this just simply technically, if you just sort of ignore all the headlines and you trade this technically, certainly you got a sell signal here. Certainly this 30-50 is the defined risk zone. And beginning of the week, you could probe this thing all the way down to maybe 28.50 as a potential first-term target for the shorts. So if you ignore all of the fundamental background and just trade technically, it is definitely looking like a sell. Dollar yen. What's interesting about dollar yen here is, as I said, the fundamental story should provide a much stronger upward movement, but we haven't seen it. The very tepid kind of upward move here to 111 is hardly a very bullish signal. A true bullish signal in dollar yen, something that, on a long-term basis that would really confirm that the trend is resuming its upward movement, would be the break above the 112s, right? So now we're basically been contained in the 110, 112 territory for a very long time, as the friction between the positive economic data and the risk off flows is keeping the currency contained. As far as yields go, yields are starting to move our way back up towards the 3. You probably could take this. I would say you could take this as a long trade, but it's a lower confidence trade. I don't have a high degree of confidence that the long trade could work, but the point is that here the risk is very defined. The risk is really 1025 to 1000, so it's only about a 100-point risk. We do have a higher low, right? And overall, the structure, the upward structure is still very much preserved. So you have a whole series of higher lows, supported at the 500 more or less, a positive close on, not exactly a booming positive close, but a positive close on a day. Sort of I would call it a hesitant positive close. And that is really what I would make the dollar yen. Dollar yen is a hesitant long. You can take it because the risk is relatively well defined, but the confidence factor in whether we can break out and move towards the 112 zone really remains to be seen. If we can take the 112 zone this week, it would really create a much more long-term positive structure for dollar yen and confirm the whole bullish US thesis. But until and unless we get to that level, it is a hesitant long, and that's the best we can do as far as what the technicals and the fundamentals tell us. So that's how the week shapes up for the majors. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.